You're running full speed, but the markets are faster. Quasar Markets Live brings the world's top financial minds to you. Everything you need to know in one place. Learn from elite educators and gain a competitive edge, leveling the playing field for you. Join the conversation. Quasar Markets Live.
Good morning, Quasar Markets Live. We've got a big day planned for you today. Markets right now, I'm trying to digest here, see what's going on. PCE data coming out, GDP data. My first thing that I see on GDP data wasn't very good. Rates, let's see. That's going to be our key tie here. What are rates doing? Jumped up a little bit, but not really much. Pretty subdued. Okay, so fourth quarter GDP numbers up just 1.4%. Badly missing the estimate there. So that's definitely going to be one that weighs a little bit here. We'll hear more on that. It looks like I don't see PCE. Yeah, there it is. 0.4% month over month versus 0.3% estimate. So a little hotter than expected. Doesn't seem to be moving the markets all that much. The NASDAQ slightly down a little bit from the highs of the morning here on that news, but not really moving the needle that much. And again, if we look at the volatility index, it did shoot up a little bit here, but subdued at 20.91. So it did move to the upside with that data release, which sort of changes or makes the, that's obviously today is data there. Quasar Markets Live, without a doubt, a big part of the day is going to be digesting these GDP numbers, these PCE numbers. We got consumer sentiment coming out later. We got some manufacturing numbers coming out. So it's going to be a data digestion day. Besides that, the main stories still have focus on Iran and what's going on in the Middle East. Definitely is, the biggest stories. Could be if we get into the Supreme Court tariff ruling today. That is rumored to maybe be happening, but we don't know. They tell you they're going to come out with a decision today. They don't tell you what it is. A lot of the news is also going to be focused today around the cracks in the credit cycle. So tune in at 9 because those are definitely the 3-4 big things I have for Steve today. Are what do we think about the Supreme Court? Are they going to have a decision? What do we think about these GDP and PCE numbers? What do we think about Iran and oil? And then a little bit about NVIDIA back in the news. They did announce that they are reportedly near a huge $30 billion investment into OpenAI. So now we're back into that flywheel rotation happening again. It's hurry up to slow down, I guess, is the takeaway. VIX is climbing a little bit here, trying to break through 21. So that is the case. Rates, not really all that moved. They're just still kind of low. 10-year at 4.063, 30-year right at that 4.695. So they didn't really do much of a move there at all on this news. So that, I guess, is good. We'll take stability. DXY still moving slightly to the upside here today, but below the key levels that Mr. Flanagan tells us to watch for. Gold back above 5,000 does tell us a little bit of a story. The hedge is still back in play. Nicely regained that $5,000 handle here. Let's see if it can continue to the upside. And the same thing, silver quietly regained the $80 handle. So a nice move to the upside there. And I will say, I did hear BigBeat on yesterday with Bubba, Todd Horowitz, from Bubba Trading, who said that, this is actually a healthy pullback on gold and silver, and in his view that it leads to even a bigger explosive move to the upside next time. So interesting there. Make sure you go and take a look at that. Bubba always has good information to take a look at. And oil, like we said, is cooling off. So we're getting a mixed feel out of, the Middle East. I guess maybe the fact that the president used 10 to 14 days, have us a little bit, calmer there. That would be the only takeaway I really have. So let's go through our normal morning watch list. What are we looking at first? Again, volatility is slightly elevated, or actually rather elevated at almost 21 here. So if you're looking for a hedge, that's probably not the way to go this weekend, as it's already pretty elevated. Our rates are conducive to a risk-on environment. They are moving to the downside. All three of the major ones I watched, the 2-year, the 10-year, and the 30-year, moving slightly down. With that being said, we do see the DXY, the dollars, pretty much stabilizing, not really moving to the upside too much, but stabilizing. And as I said, metals, gold and silver, both moving to the upsides towards the highs of their trading day. And oil's pulled back about 0.5 percentage point here. Nat gas continuing to pull back, came below that $4 level. I thought that was impressive. Now threatening to break down below the $3 level. We'll have to make sure we ask BigBeat if this is the time to look at natural gas. And Bitcoin under a little bit of pressure here this morning. It was having a strong day yesterday. We had seen on the daily chart a nice little 2-day little recovery that was in play, but that reversed. And we broke through. My key was staying above yesterday's high. And we now fell below that. So a little bit of negativity now hitting crypto. Ethereum's looked worse. It did not have a move up yesterday. And here you're really, right now, I'm still respecting that 1900 as a solid support, but it does, that's, it's fleeting. It's fleeting. But until it breaks, I have to respect that 1900. Same thing. It looks now like we might re-challenge, to me, that the 66,250 area is sort of, again, on Bitcoin, been the area I have to respect after that the February 5th and 6th drop in recovery. We've tested that area quite a few times. And again, it is shown to be support so far. So until it proves me wrong, I have to look at that as the bottom side of the range. The way it's testing it, though, for me, I'm not so much looking at buying that dip and playing it back up here. To be honest with you, I'm more in the mood of a whack-a-mole. If we do see a pump up like we saw overnight, you're probably looking to fade the downside on the back. Overnight in the overseas indices, it's been a weekday was a weekday in Asia. The Nikkei down about 0.5 percentage point. The Hong Kong market's down about 1 percentage point. But we do see Europe has been up, and it was up about 32 basis points. They did set another high this week. So while we have stalled out our indices, they are continuing to see new highs in a lot of these overseas markets. We talked about that with BigBeat yesterday, right? The rotation that he already had made into those paid off for him. But as other analysts are pointing out right now, that's still the multiples of the S&P, the multiples of the NASDAQ are still much, much higher here in the US than we see of even those growth stocks in Japan at the Nikkei or in the stocks over in Europe. So there's still some meat on that bone so far. So we'll see what let me see what they're saying about PCE here. Just giving you basically, okay, so PCE, excluding food and energy, rose 3% in December, matched the consensus forecast, but kept pivotal inflation measure well above that Fed's 2% target. So that is definitely still the case here. I mentioned, and we'll go over with BigBeat, the news stories I'm looking at the most today. Blue Owl, is there more cracks in that credit? We broke that news a little bit yesterday as it was coming out that Blue Owl had stopped payment on some of their funds. And, private credit seems to be definitely, in the traders' minds without a doubt. So that's what we'll keep an eye on today. As I look at the Mag 7, pretty muted so far today. Nvidia is down almost a full percentage point. It had a strong jump up yesterday, but it's pulling back. It pulled back a lot of that throughout the day. Same sort of setup so far. Had an early start, looking pretty solid, but now moving back. As I mentioned, their biggest news story was that they are close to finishing that deal, or a deal with OpenAI to make a $30 billion investment. So that does have them, or had them, with some momentum. We also know that Meta made it clear yesterday or the day before that they are looking to lean on Rubin and Blackwell systems from NVIDIA in their data centers. So that seems to have, that news cycle seems to be playing itself out, and now we are seeing a little bit of weakness. Apple's been under weakness, and the story there today that I'll have to ask Steve about is they're being sued by the West Virginia Attorney General for not doing enough to stop the transmission of child pornography on their cloud and on their devices. So that definitely is weighing on them this morning. They were, again, this is one that has changed throughout the morning now, was moving up yesterday, reversed, rejected right off of that 50-day simple moving average at that 266.78, and now looking to open below yesterday's low, as you can see. So weakness across Apple right now. Google was the one showing strength, but part of that is Google's the one that's been beat up sort of the most, along with Amazon, over the last several days. Since February 3rd, when it topped out at 349, retraced all the way below 300 before seeing, like I said, about a 3-day stabilization. I do like what I'm seeing here at this sort of spot here. I think when you break it down even a little bit into the hourly, you see a little bit of a better set here, that this recovery is looking pretty good here. Sort of an upward facing start, maybe of a W formation, that you look for. So could be a decent move, decent spot for Google here. We'll see how that plays out. Microsoft continues to be weak the last couple of days. Again, gap down after earnings, right back down towards the lows that we saw after its earnings, towards that 392 area. 392.33 has got to be sort of the spot you're targeting here. Any kind of break below that really starts to open, downside again across Microsoft. And we know that they've been under pressure again. This is one that's moved from a high in October of 553 down to 400. But software is a big part of Microsoft. They have a lot of components, but they are still very involved in that software as a service. And those subscriptions, while they've been sticky so far, have some investors spooked. So Microsoft at an interesting spot right here. Amazon is up slightly today. Again, this is one, earnings took a huge drop down just in the beginning of February, trading as high as $245, $250, dropped all the way down to 196 before seeing this little nice 3-day recovery here. Regained a spot in the linear regression. I like to see that. So again, Amazon, as BigBeat brought up, is it's too big. It's not just one part of their business. They are in every part. So might still be some good opportunity here off of Amazon. Meta is down about a 0.5 percentage point here. The biggest takeaway, again, if we stay within that circular economy where they all announce deals with each other and, promote each other's business. NVIDIA says no one is doing AI better or utilizing AI better than Meta right now. They have been nice little 2-day stabilization here, but looking to open down about a 0.5 percentage point. Again, for me, I like what I see upside wise if it can break through yesterday's high, which was what, 647.19. So if you can make a little run above that, I do think it's pretty positive. On the downside, again, you're looking at about that 637 area on the downside that you want to hold above. If you do that, it could catch a bid. So everything's in spots, or most things are in spots where they could catch a bid today. If the rhetoric turns down and the market starts to see some movement. So we see some buyers step in. It is a Friday. That's going to, weigh on it a little bit, but it's been a short week, so folks should still be around. And then lastly, Netflix, which has not found a real bottom yet. Again, it's trying the last couple of days, but now again, just sort of dropping off. So is the tech rally already over? Was that all we're going to get out of it right now? That's what we have to see. The big news next week will be NVIDIA. They have earnings on Wednesday. So that's going to be the big bellwether next week that we keep an eye on. But, Walmart didn't really deliver. None of the Mag 7 really delivered, right? Amazon dropped down on their earnings. Meta did gap up on theirs, but they've retraced and, filled that gap pretty quickly, and it broke into lowers. Tesla, since their earnings, they've sort of treaded water. They haven't really been part of that. Their story has been more on the robotics side. Man, I did see that Chinese robot that they have that can now do backflips. What a difference a year makes there for sure. Without a doubt. What's this? It's just about possible migration out of California. Nothing too big there. Okay, what are we looking at? What are the movers so far this morning? The biggest open door was the biggest gainer so far this morning. Earlier, still up about 15.7% here at $5.38. This is after the online home buying platform recorded a quarterly loss, to be honest with you, of $1.26 a share on revenue of $736 million. The key part to that, though, is that $736 million in revenue, because I believe the estimate was to come in the 500 range. Yeah, 594. So a very significant revenue beat has them moving to the upside nicely there. This thing has been trading like a meme stock for a while. This is its first true bounce again since back in December. So, and it did a heck of a run there. So Open Door does have room to run. This is always a fun one to watch, meme coin mania. From where it's at now for me, you've got room right up to that 595 area for sure, which would get you right into the middle of about where it stalled out last time. So that would be the key spot. And I'd want to see what it does as it approaches 577, where it took off from last time, to make that move all the way up towards 8. But Open Door, one of the big ones to the upside. We'll switch around and go with one of the laggards. Company I was not that familiar with until I woke up this morning and saw they're down 49%. And here is some of the issues when you run into biotech medical devices. They're down 47% because the healthcare company said that its multi-cancer early detection test failed to meet the primary endpoint of a recent trial. While it didn't meet the target for statistically significant reduction in stage 3 and stage 4 cancer, the trial showed favorable trend towards stage 3 and stage 4 cancers. So, not the death toll maybe to the company, but pretty close here, has them down 50%. And you can see again, retrace most of all of the explosive growth that it saw since September. right at, again, charts don't lie, and, past history tends to repeat itself. You can see how what was its former resistance is exactly where it kind of has bounced to this morning. Now we'll see if it holds up here. But down there, definitely there. That's an issue for them. Not much that they can do about it. In other words, again, that if that's their main drug, then they're in problems for a while until something works out there. Newmont, another one that has been hit a little bit this morning, down about 3.35%. After their earnings, they had actually moved up as soon as their earnings had come out. They came in. Let me grab their data here. They did post their fifth straight earnings and revenue beat for the fourth quarter. They reported adjusted earnings of about $2.52 a share on sales of $6.82 billion. That included $5.81 billion in gold sales, up 20% from the prior year's fourth quarter. And I think that's probably what weighing on people. When I read that this morning, I said, man, 20%, considering how much gold's been up in the last year, is that actually a decent number or not? And it looks like that's what might be weighing on the market as they weigh through it. Because the street was only expecting $2 a share, so $2.52. Nice beat there. They were expecting just about or just below 6.2 billion. Coming in at 6.82 was solid. And again, their yearly 2025 yearly EPS came in at $6.89 a share on sales of over 22.5 billion. And again, their gold sales are up 23% from the year before. So you would think that would be good. They said they achieved full year production of 5.7 million attributable gold ounces from its core portfolio, for a total of 5.9 million gold ounces, as well as 28 million ounces of silver and 135,000 tons of copper. They averaged a reported realized gold price of $34.98 an ounce, up about 45% from $2,400 at the end of 24. Their CEO did, of course, call it a milestone year for them. They delivered on their full year guidance, strengthened their fiscal financial position, and made meaningful progress on their commitments, including delivering a record $7.3 billion in free cash flow, generating $3.6 billion from portfolio optimization, and returning about $3.4 billion to shareholders. So they did outline their capital spending for this year too, and raised its quarterly dividend once again. So Newmont, again, numbers are strong. Reaction so far a little muted, and I was surprised to see it go below yesterday's low again here, which is right about where it stalled out. But this could be one, again, I'll be watching it through the open, see what we get out of it, because from what I saw so far on their dividends and everything else, it looked good. If we believe what some folks in the metals industries are saying, where this healthy pullback in gold and silver are actually going to be the spot to buy for the next run up, then these miners should have another leg in them, and Newmont being one of the biggest and one of the brightest. So we'll see how that goes there. A couple of others on the bad side. Akami Technologies here definitely getting hit pretty hard. They had less than stellar earnings, and that has them down almost 7% here this morning. Trying to see if I had too many interesting tidbits on that. Not really. But the company did have both a beat on their top line revenue and EPS, and they expect current quarter revenue of about 1.06 billion to 1.09 billion. So their forward guidance a little bit less than expected, and that has them under pressure too. On the other side of that, one that Steve and I are not normally a fan of, AppLovin. Nice move to the upside, up 1.5%, almost 2% yesterday, up another 3% here today. The advertising platform intends to build its own social networking company. So investors are excited that they're about to do this. A job posting on their website revealed a mobile ad tech company is hiring a software engineer to design and build the digital backbone of their next generation social platform. It comes after AppLovin made an unsuccessful bid for TikTok's assets outside of China. As we know, that news was broken by the Wall Street Journal. AppLovin, they're pioneering the future of social connectivity by building a next generation platform that redefines how people create, share, and engage with content, the company said in its job posting. So we'll keep an eye on it. You know, that could be a game changer for them. We'll ask Steve what he thinks. Does that change his view on AppLovin? I'm going to be more in the view of I need to see it first before I really believe it, or I, embrace it for, I guess would be the way there. Another one not having a great day today. We do see more bigger laggards coming out of earnings than bigger jumps to the upside. Copart, the used car specialty store company, down about 10% here, and this has just been in free fall since May of last year. Again, May of last year, this hit 64, down almost 50% from those highs. They had earnings and revenue that both missed expectations. Reported a net income of $351 million, or 36 cents a share, missing the revenue of 382.5 that Wall Street had expected. Revenue grew 3.6%, which was below the expectations, again, of Wall Street, down about 10.41% on that earnings miss. So, definitely earnings, my takeaway has been is while we're seeing some winners, there are more losers than winners when it comes to it. And the beat down is sort of worse than the bump up is, so that is definitely what I'm seeing so far in the market. Again, Open Door up about 15%. We do have a couple of others that have been up today. Texas Roadhouse actually had their earnings, and while they had a miss on their EPS and top line revenue, investors seem to be giving them a little bit of a favored look here, and they're actually up 3.28%. This is after Cheesecake Factory got drilled yesterday on their earnings. So I thought this was a little bit surprising. I have to, in full disclosure, tell you, I ate at Texas Roadhouse this weekend for only the second time and was fairly impressed with their offerings. It wasn't bad. It was a solid meal. I can't complain. It was crowded. So I do think it's maybe one of those restaurant chains that you could see that wins from that trade down. If you were eating a Capital Grill where it's $120 a person, getting a steak at $50 a person at Texas Roadhouse might be something you look. We'll have to ask BigBeat about that also when we get him in here. Crypto, as I said, it was looking better this morning than it is now. I was hopefully optimistic there that we were going to see a continued upside when we had come up, or when I was looking early this morning, we were challenging the upside of that 68,500 area. But now we've pulled back, and my key area I was watching was, could we hold yesterday's highs? Now we haven't been able to do that, so I do think we now on Bitcoin retest probably that support at 65,500. Ethereum has not even looked as strong, but as I mentioned earlier, there the line to hold 1,900. It's done it for the last several days, although I don't like seeing it doing it with lower highs each of those last 5 or 6 days. But until it breaks down on 1,900, I have to count that as its solid support. And Solana actually was looking like the best, still is looking like the best, where it had an actual setup that I was looking for that to try to challenge back up into that 86, 87 area. But again, everything has sort of turned around in the last couple of hours, and ETF outflows for both Bitcoin and Ethereum were pretty big yesterday, which show institutional interest still not exactly where we need it to be. I know he's here. We've got a big day planned for you at Quasar Markets today, everybody. Quasar Markets Live and its new look, but let's bring in the man himself.
When markets move, Stephen E. Orr takes the chair. From the White House to Wall Street, he's spent decades at the intersection of policy, markets, and real capital. And he's seen firsthand how institutions use data behind closed doors. Now, as founder of Quasar Markets, his mission is to pull those signals into the open so everyone can see what really moves the markets. This is Stephen E. Orr, BigBeat on Wall Street. Let's filter the future live.
BigBeat, congratulations on the new kickoff, my man. I know you and the team have been working real hard behind the scenes, and we've got some amazing things people are going to see today. Before we get into it, PCE GDP, I know Mr. Flanagan, you're going to have to get on his case today because, I mean, we're looking at European-type growth at one and change. I mean, what's going on?
Thanks, Howard. I appreciate that. Yeah, we got a lot going on here. The day is going to be a very exciting day as we're going to go all day today, starting after the show. We'll flip over. We'll talk about that in a little bit. It's all easy to be the president of the United States. Howard, it's really hard. It's really hard. You cannot say we're going to have 10% growth in the United States and cut the GDP in half. So, you know, I'm glad that we're cutting the government down, but you cut the wrong parts of the government. Sorry, I don't want to live in a country that's sick, uneducated, and so that's a problem, right? And people aren't feeling good, so you don't feel good. They don't go out to eat. But you're seeing all these things, right? All the things we've talked about are now happening in real time, and we're now seeing it, right? That's the best part about Quasar Markets. I want to be ahead of the game. I don't want to be behind the game. I don't want to wait until some news piece is coming out because I'm going to beat them by 2 minutes. I want to beat the markets by 6 months. I want to be prepared, right? And that's what's happening right now in the markets. We're seeing everything that you and I have been talking about showing up in real time, seeing how it really affects the markets and how things really. I don't need a chart to tell me that the economy is not that great. I don't need a talking head telling me that the economy is not that great. I'm seeing it, and now the numbers are telling you that, right? Numbers are the last thing. That's why when the Fed goes, well, we're data dependent. By the time they're data dependent, it's too damn late. Now
go to the grocery store, look at the shelves. Go into Walmart, look on the shelves. Exactly. Go into Costco, look at the shelves. See what people are buying. You know, do channel checks. Yeah, could you do a lesson maybe on channel checks for the Fed?
Yeah, I can do that. I love that. I'll make an easy one for everybody that wants to know, right? One of the things that I love is my Gmail, right? Just go into your promotions tab and go type in the number 60 or 70 or 80 for search, and you'll see how many promotions are out there. You see quite a bit of 80 and 90%. We're done. 60 to 70, that's pretty good number. You know, it's still bad, but I get a lot of 70s and 80s. I go, ooh.
And I'm seeing things pop up. A charting company you and I both like to use just did an 80% Valentine's Day promotion. That was never on their books. Because it's a company I love and have used for years, and I track their promotions because, as you know, both of us have about 3 years prepaid already. Because we're big fans. You're a 5, I'm a 3, you know, because I'm such big fans. But I was like, wait a second, Valentine's Day, that's not one of the big 3 they do. They do 3 a year. So, you know, we're seeing it in all different places. Like you said, cruises. I'm not a big cruise guy, but I made the mistake of mentioning, I guess, to the wife near my phone that I would take the little one on
35.
A cruise.
I have 35 free cruises right now. I can't even go in.
They're coming out of the woodwork after me, trying to get me on a cruise. So I'm with you there.
Yeah, don't type in Disney Cruise in any search engine. You're screwed.
Yeah. Oh yeah, it's already got me. It has me because I made the mistake of looking there, Steve. You know, you and I were also on top of this months ago. Blue Owl. You know, is that the canary in the coal mine right now? What are you hearing?
Here's a good one. Blue Owl. The Blue Owl is trying to sell their bonds, and they did to themselves. To another company that they own. Like this, it's like taking the plug and replugging itself back in the same slot. Like it's, folks, this happened in 08, by the way. It happened in 07, right? It happened in 06, right? What was going on was the re-engineering of capital debt, and the capital debt was a problem. And what happened was companies like Blue Owl back then started, well, massive companies like Lehman Brothers did the same thing, right? That when their debt started collapsing, And I heard over the last year or 2 years going, oh, the bond market's just fine. The hell it is. It's not good at all. Why? Because people aren't investing in the bond market. They're not putting money in the bond market so that they can shell out money to reinvest. They're putting it in the stock market.
Japan, now, why are they going to move stuff around the globe for 2%? We've seen about 100 basis points shift in that gap that we've seen on their 10-year versus our 10-year. When does that, tip the scale even further? That's
4.079% right now. And the housing market's collapsing. Rates are coming down and the housing market's collapsing.
Yeah. I mean, I'm looking at headlines right now. The biggest purchase in life now seems unaffordable, and that's putting consumers in a sour mood. You just hit on it. It's funny. I literally just happened to look at my Twitter feed, and that's literally what's there.
And I saw some new numbers this morning. Hold on. I saw some new numbers this morning. AOC is now getting beat in the primary by 2 people. She's now double digits down by 2 people, right? You talk nonsense, you're going to be nonsensed out, right? Republican or Democrat. Well, I'll hit them both, right? Look, we need a government that works, that doesn't yell at each other, that doesn't scream at each other. Common sense. That's the thing we missed.
You called that thesis a couple of months ago.
Common sense. All I need.
Yeah.
Elizabeth Warren saying that Bitcoin is the worst thing on the planet, right? It's nonsense. It's nonsense.
Yeah. Well, and I get it was funny because I said it to myself when it came to crypto. There was a big conference which was good down, but where was it? Mar-a-Lago, who was sort of behind it. That family. So what does that do? It turns off everybody else. And that's a tough thing that we're in right now. It's part of our overhang. It's absolutely part of the overhang right now. It
shouldn't be political because this is not a
U.S. It's as apolitical as it gets.
it's anti-political. It hates politics.
Yeah, but it is. It's got caught up into it. You nailed it. That's an overhang without a doubt right now that you're seeing in the market. In the crypto market. So you gotta keep that in mind. Oh no, oof, I thought I disconnected myself. Steve, the other thing that what you're talking about, what we've been talking about too, is the circular economy is what seems, that's why we continue to move up. Is if Nvidia is just going to say, hey, I'm investing in OpenAI and that's what's keeping it going, and then Meta says, well, I'm going to buy Nvidia chips. And then, Jensen Huang says that Meta's using AI better than any other company.
They are.
Yeah, but that's where, to me, I think the malaise, I think we're sort of sick of hearing them keep on telling each other the same things. And that makes that earnings.
The good old boy network. And look, they're protecting themselves. And I don't blame them.
Absolutely. They're selling their book just like everybody else. Everybody sells their book. There is no doubt. I don't have a problem with
that. Self-promotion is great. I mean, we all have to do it in order to get.
Hey, listen, I say don't fade the Musk for a reason, because he's been the greatest showman in stock history, maybe. I got to ask that before we go on. Did you see that robot in China that they now can do backflips?
Oh yeah, no, I mean, we're so far behind in robotics. It's not even.
Oh yeah, I didn't have that on my 4 things for you, but I just saw that before I came on, and I was like, holy man, what a difference a year makes. That thing was like last year. It looked like me after too many drinks on M Street.
4 years ago, I mean, AI, the spaghetti eating Will Smith looked like a cartoon. Today, it's a movie. We got movies coming out now. All of a sudden, now Hollywood's worried. They weren't worried 4 years. Oh, we're not going to be replaced. Now you are.
I saw Mr. Titanic, James Cameron, out there calling for doom and gloom of Netflix.
Oh my God, movies are over. No, movies aren't over yet, folks. Yeah.
Although, but I'll take the other side there, because I listen to you all the time. You've been a big thing that one of our biggest exports is Hollywood, right? And that's what he was bringing out, that could be at risk. I don't know if that's true enough. Like I said, it's not my.
What's interesting is when we went from the talkies to pianos, from talkies to color to everybody, the people that were doing black and white movies lost their jobs, right? Because they didn't understand color, right? They didn't understand sound. When sound came around, the number of people that were playing the piano lost their jobs. They didn't need them anymore, right? This is just the next progression of history, right? Okay, so you better be invested in it. That's what we're here for, to get you to invest, right? To understand the investment, where you should put money. But right now, Howard, think about that. think about it from the perspective of where we're going, right? This is going to give people that don't have the ability to build the $1 billion money to go build the next Tom Cruise Mission Impossible. There may be some filmmaker and we don't know about, all of a sudden makes a new AI film that we all love. A new real.
It democratizes it. I mean, certain things I don't mind, again, from my sort of libertarian crypto background, and the democratization of artists, I think, is a big boom in that.
The world doesn't need another $1 billion actor, right? We need smart thinking movies that make us think and educate us and entertain us. It's okay. I love entertainment.
Is nothing wrong with entertainment. I look at, I watch, financial TV all day for part of my job. So by the time I'm done, I don't want any news. What I want is fluff, like you're saying. I want to watch Landman, or I want to watch, whatever it is.
And you know what? Landman's very entertaining. It's very funny. And it's also very educating for people who don't understand.
You learn a lot about the oil business that I didn't know, or I did know, and that just reinforced that you had already sort of led me into. Steve, I got to ask here, gold. I saw you and Bubba yesterday, and he thinks this healthy pullback allows for gold and silver to have not only higher highs, but he said a bigger run than the run we've seen. What are your views on that? Is this, because he's not the only person I've seen. He's just the most credible that I've seen. You know what I mean? Quite honestly, because I've seen a lot of like the pundits that I don't pay a lot of attention. And Peter Schiff's, again, selling his book. I'm not listening to it.
Peter has, the bond market's collapsing. We see that happening in real time. Blue Owl's a good example of that. And in 10 years now, 4%. So we understand that. But what we have to understand, Howard, is the next level of this. Where are we going next? And we've had a hell of a run in gold. We've had a hell of a run in silver. And it got out of control. And most of us made money on that nonsense, right? So on both sides of that nonsense, right? Oh, then it collapsed because people didn't know they were doing. They were oversizing it again. Like I said on Schwab the other day, we're fairly close to where silver and gold should be, right? This is about where we are.
Fair value.
We're fair value. Look, it drops down to 4,800, goes back to 5,000, drops back down. That's about where gold should be. I think gold gets back down to 4,500, if not 4,000, because in the next 6 months, if everything stays as is. Now, listen, if we go to war with Iran, and I'm doing predicting, then we will probably pump. But remember, gold and silver are hedges against your portfolio. You cannot take your gold bar.
They're not the basis for your portfolio.
Right. You can't take your gold bar and go eat.
I have, it's too many people over the years that we know that when we say you hedge with VIX, make VIX their biggest position, and then they're bitching and complaining when we're like, hey, it didn't, luckily we didn't need that hedge. Exactly. That's the idea. So understand the difference between, what these roles are. The same way I tell Bitcoin, it shouldn't be 80% of your portfolio. It's not even 80% of my portfolio. So it definitely shouldn't be yours. Those are the things that we keep.
These are back down to 600 already pre-market here. I mean, it's people are starting to realize that maybe we have a guy who's not telling the truth here at the White House. Maybe he's just not quite all up and up. You think? Tariffs are killing us. We just saw this morning where Russia's now running $90 billion scam to get oil, selling oil. They're selling their oil. You don't think?
Yeah, there's definitely cracks in the fissures here this morning, in my opinion.
All these things we talked about, every bit of this, nothing is new to us.
And it's just, even for me, just looking straight at a chart technical, we broke below yesterday's low already. We broke below, Wednesday's low. We'll probably challenge at least the body of Monday's low, which was 598. We'll most likely on the Qs challenge that 595 area.
And you look at Europe, they're laughing at us. They're like, oh, okay, I thought you guys were going to have 10% growth this year, and you can't even break 2%.
Well, I'll be watching. I expect you to ask Mr. Flanagan about that, because he's been the one that said,
bring him on, baby. I love this. I love it. Bring him on.
Yeah. Well, my thing is that I'm starting to feel that maybe we don't have that, as much strength around the rest of the globe as we thought. You know what I mean? Is that, Japan, if they're going to start not buying and supporting our bonds, if the stock still has a lot more upside than maybe the S&P right now, that can change stuff, right?
100%.
Steve, I know you have to get ready for the show, the big kickoff here and I've got to get ready for my day. So what are the last words before we hit the weekend here?
That it is the weekend. Enjoy the weekend. You know, there's a lot going on in the world, and I think I say this all the time to people. You know, the nuttiness and the nonsense of the world right now. The best part about it is we're still on the upside of the ground, right? So enjoy
Absolutely.
life. Make sure that you hug your loved ones, and
yeah, I'm going to take the little one roller skating, so that should be fun. So
Yeah.
we'll have fun. Okay, everybody. Steve will be back at 10 o'clock with an amazing show. He's got O in here right now to take my spot. We'll see you guys on the back end.
Good morning, everybody. How are you?
Well, what's going on, man? Looks the world's falling apart, right? According to the new PCE numbers and the new GDP numbers, and everything seems to be the world's falling apart, right?
Well, you know what? The numbers say a lot, but I always like to be a little bit optimistic because I have a whole future ahead of me.
And let's get him in here too. Let's get Steve Flanagan here as well, man. I can't wait to beat him up too as well. Steve, meet O and I used to do the Benzing group and Benzing Live. We started it, and here we are. And Steve Flanagan, Mr. JP Morgan Forex Desk. You called, Steve, that this is going to be a great year for the GDP, and first numbers coming out, not so good, my man.
Hello, Steve. I think you went mute on me there.
I can hear you. Can you?
Steve, I think you're not. I think you're. It's on your side, Steve. But we see these numbers coming out. That's part of it, right? That we're now seeing the actual numbers coming in now.
Right. Which one? What stocks do you think do you see the most effect in? What sector?
Yeah, I'm going to do that right now. I'm going to share my screen here. I'm going to add it in. I'm going to try to get this up and running here for us so that we can do this together. Sorry about that. And share the screen. All right, here we go. And pulling up these charts, we're now at the point. I'm going to pull Steve back. Hopefully, Steve, can you hear us now, my man?
Yes, I can.
All right, great. Yeah. Steve, come on, my man. The president called for 10% growth this year in the GDP. We can't even break 2%. 2 times 4 is 8. We can't even get to it, my man.
Yeah, a disappointing number, a sharp slowdown, but 43 days of that number was a government shutdown.
Yeah.
Government spending, federal spending was down 16.6% in that number, which is a full 1% of that number was your government shutdown. So look at all the negatives prevailing out there and all the headlines. Stocks are going to obviously reflect on that today. Dollar indexes. But you know what? You got to throw this number out because now the big surprise is going to be when a real first quarter 26 comes out and the revisions backwards. So I'm not watching this number with any real major concern at all. But I am looking at the inflation data again throughout the world, still declining. U.S. number was slightly up with this, but nothing big surprise here, Steve. What I will say, the one big surprise was the tick data yesterday. Tick data still showing net foreign inflows continue to be positive, moderated from the previous report, but still up near historic highs. So where is the Sell America narrative of the last 2 months? Again, another one, just a narrative, just another negative.
Well, if I pull up the numbers here, Steve, I mean, it's the Qs right here, and I pull up a weekly chart. The Qs were at 640 back January 26th, and now we're at 600.
Yeah.
That's an 8% pullback.
Narrative is negative, Steve. As I talked on our last show, these AI social sentiment indicators run by these massive hedge funds are just killing this market right now. And they're going to lead.
Are they doing it on purpose?
And not purpose, Steve. Their motive, their direction is make money. And this is an easy layup because it's brand new technology.
Yes, that's exactly right. I think these big firms are laying out a narrative to get, because we know AI is awesome, right? I'm now seeing Blue Owl Capital now coming out to defend his position this morning, but on CNBC. But my goodness, Steve, you're absolutely right. It's like if the narrative doesn't fit the numbers, then they make a new narrative to fit the numbers to go the right way. I agree. They put the screws down, and look, he who controls the media controls the money. If you don't believe that, just go ask Jeff Bezos, or go ask Fox Biz.
That's right. And right now it's self-fulfilling. You get negative headlines, you begin to sell. Notice where these big moves have been occurring, specifically in this last 2 weeks, pre and post market trading. And that's where you're beginning to get the wind up, which leads everything.
All right, let's get to it. I got the charts up now, the Q's here. I'm going to pull up a 5-second chart. So I know we got about, it's like 7.5 minutes now to the open. And right now it looks fairly negative. We're now under 600 here. So 600 has been the spot where the buyers have stepped back in. You can see this down here, the buyers are at. We'll see if that gets back above. But these numbers, you know, they hit once again, they hit the headlines, but hitting the headlines means they hit the algos, right? Oh, you're the Mr. Algo.
Well, yeah, but you know, like even when we were talking about yesterday, you know, like a lot of it is happening right now where they're trying to push with these tradings to get more out there, but it's not really for like Seven said, it is happening in the pre-market, but right now it's just the sentiment. I think it's not.
Do you feel like it's the I mean, in my case, I look at this and I go, okay, whatever happens to pre-market now is because the playing around, but the cash market is the hot market right now between 9:30 and 10. You know, but that means that's people that can't buy or sell in the outside the cash market, right? Which means usually it's retail, right? I mean, institutions sell and buy whenever the hell they feel like it. And are is this just zero DTEs and all the derivatives that we've been playing with, or as Buffett calls it, weapons of mass destruction?
I think you have to take everything into consideration, including that. But it's also that there is, like we've been saying the last couple of days, the volume hasn't just been there, and then when the market opens, there's a huge influx of volume, and then it kind of rebalances. And sometimes in those cases, it might start negative, but like we saw yesterday, you know, before I left, some of them have turned positive. So, well, I'm here to see. I'm looking at, like, for example, we were looking at yesterday Amazon. Amazon right now is flat, right? I'm looking Apple down, 0.69. It's not something that you're like, wow, it's like devastated, I mean, for today,
if you look at a daily chart on Apple and they got new products coming out, I mean, it's taking kind of a big of a hit here. It was around 282, now down to around 260 now. So that's, that is still 22 points move there.
Right. Let's see here. I'm trying to.
If you look at Amazon now, the biggest company on the planet based on revenue. I love this move on Amazon. I'm a buyer, as you know, I'm a buyer of Amazon. I think the bounce here, Steve, look, I haven't stopped buying things at Amazon. We all have Prime accounts, right? So, I mean, it's not like, Bath and Body Works now.
Based off a chart like that, Steve, you have a definitive exit point should you want to trade it. I mean, clearly, if you break the bottoms here of this rounding, then it's an inexpensive cut here. And this is where, the charting patterns can work very nicely for you. If you're an investor, I mean, you're looking at the largest company now. This is dead buy zones. I just think that right now you're the negative sentiment. I think we still have about 3 weeks to go. When I look at the, out the front window here and the setup here is that the turnaround will happen March 18th, 17th in that zone. Why? The Fed meets on Feb 18, ECB Feb 19, B of E 19th, RBA 17th, SMB 19th, and Bank of Canada 18th. And you can have an entirely different picture by the 20th of March. And I do believe there's going to be a lot of pressure on global cutting of rates.
Good morning, Zora. Appreciate that. Yeah, very cool. Yeah, okay. You know what? And you've been pretty hard on Europe. Okay, wait a minute. Hassett now says on his New York Fed reaction, he probably got a little emotional. 2 days ago, we all know Hassett said that this is the worst written paper ever. You think, dude? It wasn't that bad, Steve. It was actually pretty well written. I liked what they had to say. They backed it up with facts. They didn't just write. The New York Fed isn't going to write something just out of the blue, right? Unless they do. I agree. Not you and I have been on the same page with that. But the Fed has been too academic. I made this mention yesterday on the air that, as you know, I'm a Bank of Atlanta. I'm on that board, and I said that the next governor should not be so academic. They need to have some real world life experience before they go into being a governor, and some community experience, right?
Absolutely, Steve. If they've got a dual mandate, they've missed on both accounts. So, I mean, they've got no credibility in this place right now because they've totally blown both of their mandates. And now the GDP, I mean, okay, government shutdown, and that's what I'm saying. But 1.5%, where were you guys? The government shutdown happened months ago. What were you guys watching? What was your experience in there?
They're still saying data dependent, and I don't understand it. The data's in front of them now. It's even worse. Now we see the numbers coming out. It's even worse. What do they do now? They're going to overreact. Are they going to be like another Kevin Hassett and overreact again?
Well, you know what? They're going to put their hat right on the inflation ghost of the past and say, "Oh, core PCE, was up 0.1 higher than what." Look around the globe. Inflation is cratering everywhere. Europe is operating below 2%. Switzerland is at 0, if not lower. China is in the midst of a deflation. Japan's number came out today, and they're actually below the 2% now. So, the United States can't be standing here, or the Fed can't stand here and say inflation.
Yeah. Oh, do you see the same thing? Are you still seeing inflation up there in Detroit, or is it abating as well?
It is. I mean, it's a nationwide thing, world thing. It's not just I believe you're both in Florida.
Yep.
Yeah. Well, it's getting kind of hard up here too. Things are just increased everywhere. I mean, from food to electricity to everything. Even gas recently has went up a little bit. I remember I used to get it at Costco for $2.40. Now it's like $2.70, $2.80. Like it's cost.
We got about 90 seconds now to the open, guys. What are you thinking? Up on the open or down the open? Steve?
I think you're going to see a down move on the open just based on all the negative sentiment. Everybody saw the GDP print, so all of the orders are in the system right now to, hey, get me out, sell. And I would look for a base in the first hour of trading, and then I do believe we'll close higher on the day.
I agree with that.
That was basically, yeah. I think throughout the day we're gonna see a reversal, but it probably just how it's been doing the last couple of days. It's gonna start low.
Yeah, but who buys? Is this short selling covering, or is this actual institutions, or is it because it's Friday and payday is next week, right? You're gonna see more buyers of the market because of the 401ks and IRAs. Who's buying then?
It'll be the same people that have been selling, Steve.
I love it. I love that answer. All right, I got 30 seconds now here in the open. I'm gonna pull the cues up here to keep our eye on it. I'm gonna change it up to a 5-second chart so we can get a better view of the quick market here in the beginning here. We know that 600 has been right where the that buy and sell line is, so we'll keep our eye here. That's the 600. 599.90 is where they right there. 599.83 and 599.91 have been the buy points. So let's see where we are coming into this. All right, here we go. We got about 4 seconds now, 3 seconds. Here we go on the open.
See.
Ding, ding, ding. And first sell. It's to the sell. It's the sell side here a little bit. Then there's a pop to the upside. So that's good. I like that. And we're starting to see a little bit Amazon, IBM, and Hood. All three of mine are on the negative. Yep, still seeing for selling. But once again, 599.38 right here. This is where we know where the buyers have been. So let's see if we hold here.
Ba-boom.
It held.
Yep.
We're holding here 630, 639, 620, 41. Yep, 205 now on Amazon. There we go. Guys, we did it again. I mean, we know what to do. That's what we're doing here.
Yeah.
Seeing Robinhood now about 33 cents here on the open here. Amazon still staying green. IBM down a couple bucks on that. I'm not a big fan of that. I want to see IBM push back up here a little bit. We are seeing the Qs now at 601 now holding up here. And we are right. The first move is usually the most raw move. It's been that way for a couple of weeks now.
You know, Steve, if we throw out another number that came out, the trade deficit, right? So it jumped up sharply. Well, what does that mean, Steve? That means we're importing again. If we're importing, people are buying. So just to offset this GDP number, and that's why institutions are going to be all over the bottom here. You know, and I think a very simple logic will be, provided a geopolitical event doesn't suddenly happen, you're going to buy dips and you're going to sell the rally. Steve, your favorite, right? Sell the rip, buy the dip.
Love it. Absolutely. And 601 now on the Qs here. So hopefully you guys listened in and you picked those up on the bottom there. It does look like that we are getting into linear regression here. I'm going to pull up a 1 hour chart on the Qs here. We're right in the midst of it, where we call the old-fashioned no man's land. 601.44. We're pushing here a little higher. Steve, it could be a good Friday here.
You know, it looks to me like it will be, Steve. I think we will close higher. We pushed the Iran clock off. So March 1st is your 10-day window. So, you know, true to form, if we don't have some progress, I guess that's when we're going to have to look at when something's going to happen. The other shoe here is Russia and Ukraine. And I'm really, you know, hoping that the Ukraine, you know, gets involved here and agrees to peace, and we can stop this horrific loss of life.
God, I couldn't agree with you more on that one, man. Enough of that nonsense. It's got to stop. Yeah. But you found out today that Russia had been selling all that oil.
Well, we knew that in Venezuela, right? Because we've picked up a couple of those, you know, ghost tankers.
Yep.
So, yeah, I just think that I'm worried right now, Russia, Ukraine, because I think the United States, if we don't get the negotiated settlement in these trilateral talks, I think the United States is going to close the door and walk out on the whole thing.
And that would not be a good situation there. I don't like that at all.
Yep.
All right, so Amazon now 206.25 here. Now on the highs of the day. Q's on the highs of the day. I like this, Steve. I like this a lot here.
I want to ask this quick question to Stefan.
Bring it down, Q. I love it.
They're gonna, if they don't go to a negotiating table soon, they might withdraw. What would happen to all the money and assets and all that we sent over there? Is it just lost?
Well, let's take this, you know, to a macro level. You got a businessman running the country, and it's called cutting your loss.
Well, I think they moved those. They might move those assets to the Middle East, though, Steve.
Oh, that's possible. Yeah. We will not lose assets. We will
not lose that. Well, I don't know. You say that. We lost assets in Iraq. We lost assets in Afghanistan. We lost assets. Now, that's a different administration. I think this administration is very military friendly. I think we just move it around to the bases of Ramstein Air Force Base in Germany, things like that, right?
Right. Yep. We're not going to remove it from the theater. We'll just back it up. But I think Ukraine has to understand that the Uncle Sam's wallet is beginning to run dry.
I think it's upside down right now. I think it's empty. I think we're trying to shake out the pennies out of the thing, but we'll just print more money, right? And that's why we like crypto. Yeah,
that's not good either.
All right, Robinhood up 2% here. You liking Robinhood here? I'm liking Robinhood. Breaking out of my numbers here. I like that.
Yeah, I'm looking at it too right now. See, I over the last couple of days, I was building my setup. So because it's kind of, I was having a hard time seeing there. So I'm looking at it. It's following the cues actually, based on how the whole market right here is fluctuating.
And here's the thing: some of the things that we're looking at. Look, the Dow is down, the Nasdaq's down, the S&P is all down, but yet the stocks we're really looking at today are up. So I'm liking this. Amazon and Robinhood. Look at this: Amazon 206.43 now.
And you got to think Robinhood is going to be one of those that is going to be a good one out through the front windshield, because retail is getting larger and larger. More articles you read beginning to start, telling you that retail is beginning to get to be a challenge to the institutional side of the market. And, I look at the silver decline that we recently saw of 35% in one day, over 2.5 times the entire global production of silver traded in one day. This is the institutional world trying to rock the retail side of the market. And, back to that silver, I still can't get silver under $90 an ounce in the physical silver market. So there's still such a massive disconnect in that market from an institutional paper trade to a physical side of silver.
I want to pull up the gold to silver ratio if I can. Gold silver, right? I had it on here. Sorry, guys. There you go. There's the gold silver ratio. Now it's 62.34. And if I pull up a monthly chart of this, where are we with now the gold and silver? This is why I keep saying that I think we're both fairly valued, right? This is where 62 is about right where it should be. So we've actually, this is a monthly chart, folks, right? So gold to silver is now fairly valued. That's why I'm saying that. You can see where a few weeks ago I said that where silver was way out of whack. And it was, and now you can see where my sell signal was, right? But you can see here right now, the gold silver is now back to normal. So that's why I don't think there's anything different here about this. We are seeing another pump here now in Amazon here, back 206.18 now. Maybe another try at this here, another run at the top here. We can see where the buyers and sellers are now sitting here, so keep your eyes very close. Bollinger Bands are now telling you where the RSI is. I have Bollinger Bands with RSI combined on a purpose because I want to understand volume on it too as well. But you can see here, I sold my Oracle not too long ago. I may be buying Oracle back again. There's Oracle now on this big sell-off here. I bought it not too long ago. And now look at it way outside the lines. A few days ago, a week ago, I bought Oracle. Now I'm thinking about looking at buying it back again. So I might be doing that today, actually.
There's your machinery overshoot again, Steve.
Yeah, agreed. I like it here. I'm buying Oracle on this dip here.
And overall, you've got the weekend ahead of us. And you know what I say on Fridays? You can't be, putting all your cards into the game here. You've got to be you have to have a hedge or a risk hedge on for the weekend because anything can happen. I like UVXY. That's my go-to. I always increase it as we get to a Friday. I don't think anything's going to run away on the top side today, nor do I think you're going to get a big dump in the market. I think
now you might see because it is monthly witching today.
Okay, that could open up that door. And next week, wow, is February a short month? We end the month next week. So yeah, want to watch very carefully our monthly closes from January because that's where the big models begin to do their revaluations and bookkeeping entries.
Robinhood still pushing it up 2.2% on this. Robinhood really breaking out of the numbers here. That's the 1 hour chart, and you can see where the sell. You can see the other day I laid lines out where I thought the breakout would happen. It did. This flagging happened, and now it's broken out. I've seen that a few days, and I like that move there. And I might be taking some off if I don't see some moves here. But I'm kind of liking what I see today a little bit here in Robinhood.
Steve, why do you use an RSI versus like a stochastics model?
Because it's relative strength. I need to understand both sides of the strength of the buyers and the sellers. I don't want to just know if stochastics to me tells me just numbers. I want to understand the power behind that number. So I use RSI. Yeah.
Okay.
Sorry. And of course, for those of you who don't know, I also use a rune. Most people don't understand a rune, but if you use RSI, you should also use a rune, and that's a rune right here that I do like. There are a few others that I do like. I like Elder's Force. Probably look, make another run here now on Amazon here. The markets are now pushing again. Qs are trying once again here to make another. Yeah, we're getting very close to the highs of the day again. See, guys, we nailed it again. A dip on the bottom and it's not hard to understand sometimes.
That's basically what's been going on. It's
just boil it down to its simple components, guys, right? That's keep it simple.
simple.
You know, if you dissect the GDP number, there's reasons for it to be sharply down. If you want to sell on that number, you're selling on October, November, and December data, which is how the Fed operates. And we're looking through the front windshield trying to see which way the curve in the road ahead. And when you look at the curve in the road ahead, there's a lot of positives out there. The manufacturing base, industrial production numbers, although the housing market's got to get itself in gear, that's an area that I think the Fed, should be really looking at, because it's probably 1/6 of the U.S. economy. And, it has been anemic growth for the past year and a half, 2 years.
Amazon now highs today, folks.
Steve, where does an Amazon go if you begin to get some attention put to your housing?
That's a good point.
Another reason why you should be in on Amazon on the dips.
Yeah, for me, Amazon is very simple. Look at the daily chart. Look at that puppy. Right off those numbers. We talked about this morning, and here's what I'm saying with the daily chart. The daily chart looks so sweet, and you're starting to see the buyers stepping in now. So I like. Oh, look at the Qs just took off, baby. Those shorts that were in there, these monthly shorts, now might be covering up a little bit. Amazon, tick now just jumped there. Tick now up 600 here. 207 now on Amazon. And Robinhood now up 3% on the day, folks. Whew, let's go.
And of course, the dollar index is beginning to trade back up too, Steve. You're seeing the Dixie now at 97.94, significantly below last week's close of 96.88. We've got some real strong resistance at 98.90. I do think that the dollar index is starting to look very good. Again, from Wednesday, Bank of America reported that, the massive shorts in the dollar are like 13-year highs. So the market is set, not only in equities, the sentiment indicators have been so negative, the market is setting itself up for a corrective rally just to unwind the massive negatives.
Zelensky over in Ukraine just said he sees so far no one sees any positive movement on territorial issue. We just talked about that this morning, right? He's got to give up some property. I hate to say it to him, and I don't like it because the way that happened. But I think I don't think Russia's going to save face unless they win something out of this.
Look, the facts are in that war, the two provinces Russia took are 80% Russian population. Okay, and if you look prior to Russia going in there, the Ukraine was operating a war against that 80% population, and so you've got to weigh this one out as to who's right, who's wrong. If the Ukraine doesn't want to give up territory, you're on your own and you're going to lose your whole country, and you're going to lose a massive amount of your population because Europe cannot defend the Ukraine, and the United States is getting at the end of the line.
Yeah, agreed. 207 now on Amazon, folks. If you're listening to us this morning, you're a happy camper here. 207.13 now. Obviously, we don't tell people what to buy and sell, but we're looking pretty good here. Woo! Let's go.
Amazon's your favorite one on the day?
You know, I have also been buying and slowly been buying IBM as well.
You've also been mentioning Oracle lately, Steve. But
I did, yeah. Let's see if I did. I did buy Oracle there. I bought it at 151.53, or I'm sorry, 151.35. Oh, well, there we go. Sorry. Oh, yeah. I'm in at 151.35. So 151.35. Yep. Mm-hmm.
Wow.
And if you believe in technology ahead, Oracle's at the center of it all.
And 207.25 now, as the Q's now making the highs of the day here, as the Nasdaq now up 60 points here. I'm loving this, Steve. We called this correctly this morning.
Yeah. I thought you might have seen a little bit more than a few minutes of selling, but it just, when you see moves like this, and as you are highlighting in a short-term chart, what does it tell you? It tells you that the institutional money is just sitting, waiting for people to sell.
They totally were. They were screaming the narrative out there that everything's bad. And we're buying, right? I mean, it's just. I love this.
And
look at that.
Now, when you see it, because you have to understand how the machinery works. They started to see the first minute of selling, and they were staying on the bid side. And then once they weren't getting filled, the bids start moving up. And as the large bids move up, the market begins, the sentiment, the people that have the bots, I call them, in the market see the buying surge, and everybody runs in the other direction. Notice the first move up, Steve, on the chart in front that you've got here. Notice where the top and then back down. Look where the down move comes. That's right where the machine stopped and stayed. Now you've gone up another move. Watch this move, should come right back.
And actually, Steve, as you're talking, I'm actually selling. I sold half my Amazon there. Yep. I took my profit on Oracle there. I like this pump, and I took money. It's too easy for me at this point.
It's important to watch a visual like that if you really want to understand, because the market is driven in algorithmic trading. When you and I press a button, buy and sell, we don't pay brokerage. It goes in like a Robinhood or a Schwab. It goes into one of the high frequency trading firms, and that's where they then unload it. And they pay for that type of business. This was back in the foreign exchange markets back in the 90s. And it will end up turning itself on its head, and retail will finally start saying at some point in equities, I want to be filled at the market. I don't want to give it to someone who then trades higher than where I'm trying.
So, okay. So President Trump will travel to China from March 31st to April 2nd. That's pretty good. Let's make a deal with China, right? You were talking about that, Steve.
Yep. That's
the president of the United States going to China. I like that. I like that. Well done, Mr. President. I think that's good. Bostic, Fed's Bostic now says that employers are more cautious about hiring because of the possibility of saving labor with AI tools. No kidding. We've only been talking about that for 2 years. I don't know, Bostic. I don't know where's. I'm with Steve on this one. I don't. He needs to stop talking, to be honest with you.
They all do. I mean, can you imagine these people sitting at a table trying to decide on interest rates with a housing market that is in the dirt for 2 years, which is everybody? It affects us all. And they're sitting there going, do you think AI is going to affect things? What do you think? I'm not really sure. I mean, come on.
You know, Steve, it's a good point. You know, people ask me all the time, how do I get my thoughts on the Fed? And I go, it's like this. If I were to go to dinner with them, how would I think that they would act when they've been drinking?
That's a good one.
I mean, think about it, Steve. If you say what you're thinking, right? A lot of these guys just talk, right? Like, I mean, don't get me wrong, I talk all the time too. But wow, Amazon, look at that. Those of you who are paying attention on Amazon and sold with me, look at that selling. That was right on target, actually.
Yeah. That's
look at that. And guys, look, that was a sell signal. We knew that. I said it right there on the show. And that's why we nailed it. Now, look, if you want to buy back in, I can see it here. This is a nice buying area. You can see it right there. Look at that. 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 Isn't that nice?
But we call that dinner talk with a Fed official Fed speak. They can speak for a half hour and say nothing.
Well, they do pretty much anyway.
Politicians do that too. But going back a little bit.
Manufacturing PMI now coming in at 51.2 versus 52.6.
Going back a little bit to the China thing and Trump going there, do you think a deal might be reached on trade and all that stuff that they're working on right now?
No.
Or do you think it's just they're going to go there to shake hands and look like they're doing something?
No, I think if you read the tea leaves, ever since the first visit and the agreement on a framework, the United States and China have had very, very little diplomatic squabbling. I think the United States and China will extend the framework. China's already begun to increase their buying of U.S. farm products. And I think that you'll see an extension of the agreement, which then drills down a little bit deeper. I don't think you're going to get a trade deal signed and sealed, but what you will do is incrementally, I would imagine Xi will then agree to come to the United States, and that would be the next leg of that framework agreed upon. And I think it'll be probably several years before, they hammer out an official agreement, but moving in the right direction. The United States, if we looked at the trade deficit that we just posted, China was one of the brilliant spots from the United States point of view. But yet China still runs $1 trillion trade surplus in the year because of Europe and other areas that they've immediately gone to. So China's looking at this whole thing with the U.S. going, yeah, no big deal. We're okay.
Yeah, no big whoop. And if we do, we still own part of it. But you know what? The Chinese, if the president was to do anything, he'd be like, what the hell are you doing selling all the bonds in us? See, that is the one thing that you and I are going to disagree on. They have been selling America.
Steve, they own such a small part of U.S. bonds.
I agree. Yeah, that's true.
Okay, it's like a drop. It's like a drop in an ocean. I'm not concerned about that at all. At all.
Yeah, but and if you tell people exactly what's going on, the truth is, the United States actually owns more of us. Right? We our own people who buy every week, right? Or payroll is what's buying the bonds.
Yeah, and here lies the longer term issue. You've got the Treasury issuing paper and the Fed buying it. So it goes from the left-hand pocket to the right-hand pocket, and it's a hocus pocus play. And that's why, I look at a better number. I want to see the debt to GDP ratio, and that's been shrinking. I'm not worried about the number itself.
Guys, I'm right now buying CoreWeave here on this dip here. I'm buying CoreWeave, CRWV.
Another oversold stock that is at the center of this tech revolution that we are still in the first inning of.
I just bought CoreWeave, folks, just so everybody knows here. Am I buying a knife here? No. I think that we're back in the numbers, and I'll show you what I mean by that. Give me a second as I make these positions here. But I like this dip here on CoreWeave.
Is this a trading?
Look at that! Look at that! Yep, I'm a trading position. Yeah, sorry.
I am a long-term holder. I'm invested in that. I'm not concerned about the day-to-day fluctuations because, knock on my door in 2 years.
Hey, look at that. Look at that pop right back up, folks. If you listen to me, look at that buying opportunity we just had. Corey
Nice
just gave you a woof.
Oh, do you day trade and jump in and out like Steve?
I used to more frequently, not as much anymore. Not as much more. I'm looking to get back into it.
What's your preferred style of trading then?
My preferred is high volatility, in and out. But that's how it used to be. And then, like I told Steve yesterday, what I would do is once I would lock in profits, I would not look at that stock for the rest of the day because I would not want to mentally be like, oh, I could have had more if it went higher, or if it, tanked, it would have. It's a mental, like trading for me is also like very mentally, because if anything happens where I don't want to be chasing, right? Because if you're chasing, you're not winning, and then if it drops,
we would call that, you buy it and sell it and walk away next trade.
Right.
Yeah.
No rear view mirror.
Nope.
That's good. Good way to trade. Do you use options?
I do. I actually was very involved. I was using Tesla options. I would, buy and sell calls, do some covered, do some legs, but it got me.
Mm-hmm.
So I'm building up a little. I have like 3 different accounts. I have one that's solely equities. Then I have one that's for options, which is a kind of smaller account right now. I'm just, building it up a little bit. And then I have a small little Roth IRA that I'm looking for long-term, not, those are like the slow and steady Warren Buffett style, because I'm only 28. So I have some years ahead of me, hopefully, that it could compound and grow by the time I'm ready to retire.
And it should. If you, my advice to any young trader in the market is buy and hold those things you really like. If you want to use Warren Buffett, that's a great example. Love Coca-Cola, bought 5% of the company. But in a longer term investor position, you should be doing that at your age. The other thing I would just comment on the volatility type trading you talked about is that that would typically be what we refer to as mean reversion trading.
Ooh, look at IBM.
Yeah. I was at Benzinga when that whole thing with the meme stocks and all that was going on, but I didn't have such a big account to me where I was like, okay, I have to something to lose a lot, right? So at the time, oh wow, look, at the time I was like looking at it in the sense of, you know what, I have a smaller account, I'm trying to double it as fast as possible. And
Everybody's
to it. I'm very aware of the risk, and sometimes it has came back to bite me. But I've learned from it. It's one thing to make a mistake and not learn from it. It's another to say, okay, go back, look at it, and say, that's where I messed up. That's the reason why I should have done X, Y, Z. And that's at least how I do it. Like if you lose a lot of your portfolio and you don't learn nothing from it, then shame on you, because it's going to happen again.
So one of the critical aspects of trading is post-trade analysis. You must review your trades in your early stages, because this helps you identify, and every one of us has a Achilles heel. I'm trading over 43 years. I still do the same thing. I do a lot of FOMO. Except the way I learned that I always do it is because I would lose predominantly when I would analyze a trade. I would say, there I go again. So I'm not going to try to say I don't do it anymore because it is an inherent flaw in my trading. So what I do is when I go in and enter in that type of environment, I only do 10% of my trade.
Yeah.
Love that. All right, guys. We're going to do the media day. It's going to start here in a few minutes. We're going to turn this off. And I appreciate Quasar Markets Live. Everybody that's out there, stick around. You'll have to refresh a little bit, but we'll get out there. And we're going to go all day today. It's a new thing, Quasar Markets on Fridays. We're going to go all day. So get ready. I'm going to turn this off and restart the whole machine. All right. From those of us here at Quasar Markets Live, appreciate you watching. A lot of good numbers today. All right. Here we go.
Thank you. Have a nice day, guys.